So I'm going to be talking about AMS. AMS is based on price cycle. You see that video, price cycle. It's actually the most powerful video amongst all the videos that I sent you guys. You guys probably like just watched it the way you want to watch it. But then let's go into what's it called? Trading view. Can you guys see my screen?
I think that I lost connection just a second.
Okay. These were yesterday's trades. These two right here yesterday, and this also Euro USD yesterday. This is today. Looking like it's going to trade up, but I was I was a bit skeptical about taking today's trade. So Ivana, can you see the screen now? Should join back. Suspicious. Oops, I declined. Let me tell her to join again. Hold on. Yeah, I will. Sorry, I totally forgot to add you to the group. But the group have not been active for a very long time now because everyone is busy with their accounts and stuff. So, all right.
Okay, I'm here.
Okay, can you see the screen now?
Yes.
So let's go here. Um, let me go to daily time frame. Let me go to daily. If I start here on the daily time frame, one thing you will notice is that each day is a candlestick, right? A different candlesticks. Every day trades on its own, whichever direction you want to trade. This particular day was bullish, but the next day was bearish. These ones were all bullish for 1, 2, 3, 4, 5, 6, 6 days straight. Price was bullish, and then 1, 2, the next 2 days bearish. Then we have a doji, bullish, bearish, bearish, bullish, bearish, or something like that. So with AMS, what we are looking to trade off AMS is just simple. If the day is bullish, just like, okay, let me take for instance this one. If the day is bullish, just like this candle, we want to trade off these wicks. We want to enter off these wicks and catch this entire move to the upside. AMS works on a particular day. We don't use previous day data to deal with today's data. No. If the day is bearish like this one, we want to catch the trade of these wicks up here and then catch the entire move down here.
Sorry, my question is how
How
to
do
know?
you know if the day is going to be bullish or bearish?
Yes.
We are going there. Just calm down. This strategy, I worked on it since 2021. It's my strategy. I didn't learn it from anybody. Around 2022 last year, ICT came up with something like this. I don't trade ICT actually. In fact, I've never studied ICT. It's just that sometimes I see ICT, people just use it, use it, use it. I'll just go to YouTube. What does this term mean? And then when I look, check through it, I was like, oh, it's just this thing now. Why are they giving it a different name or something like that? So ICT came up with something called silver bullets last year. Sorry, last 2 years. That's 2022, right? No, silver bullet was last year. But last year that he came up with silver bullets. So when I looked through it, I was like, oh, here's my AMS strategy. But not exactly it. There are some certain things he missed when he was introducing the strategy, and I was like, well, let's see how it goes. Let's see how it goes. So in the meantime, in a day, we have sorry, I didn't prepare for this class, so I'm just going to draw everything myself. I'm going to clone this. Sorry, clone. So in a day, we have actually four sections, but for the purpose of this class, we'll deal with only three. When for IP, white guy, Shay, that's your name. For white guy, I'm very very sure you know about the four quarters in a day because I sent you the video. But for you, Ivana, I'll I'll get to it when I'm introducing BFR to you. But for now, let's just stick with these three sections, not quarters. This one is three trading sections in a day: Asia, London, New York. If we were dealing with quarters, we have quarter one, quarter two, quarter three, quarter four. Quarter one starts from 11 p.m. London time till 5 a.m. London time. Quarter two, 5 till 11 a.m. London time. Quarter three, from 11 till 5 p.m. Then quarter four from 5 p.m. till the same 11 p.m. It repeats every single day, but that's a different case. So this is, let's assume that this day is a bullish day. Price was bullish. So I'm going to teach you guys everything. So just calm down and follow me. So this will be the weeks, of course. The weeks. The weeks of the day, the high, the opening price, the opening price of the day. We'll mark it out like this. The opening price. This will be the low of the day, but we are not really interested in the low of the day because you never know when it's going to form. And then the close of the day. So our main interest is this opening price of the day, this particular one, opening price of the day. Because as I was talking to you, I wanted to buy GBP USD today. As of now, I think it's running almost 20 pips in profit. Almost 20 pips in profit. So I will get to it every single time. So if the day is going to be bullish, I'll tell you how we check for if the day is going to be bullish or bearish. If it's going to be bullish, we want to buy below the opening price and then sell above. Sorry, if it's going to be bearish, we want to sell above the opening price. So what we are trying to catch is these weeks. These weeks is what we call manipulation, the advanced momentum slash manipulation strategy. So our entry is mostly based off these weeks. So how do we know if it's going to be bullish or bearish? So let's say price opens and does this and then sets a high and then does this and then sets a low and then fails to break either the high or the low it sets during Asian session. And then London opens and price now comes down, something like this, and takes Asian low. and then gives us a market structure shift. And then we enter off a demand zone and price now starts trading up. New York starts and continue from where London stopped. Now there are three cases in what is happening right now. I hope you guys have your pen and paper. Please, you have to
Okay,
be
just a
you
second. Just 5 seconds.
you have to jot down everything and draw exactly the same thing I am drawing because it follows the same pattern every single day.
Okay.
Ready?
Yes.
Good. Now, please, there are three cases, but each of those cases has a case one and a case one. It has an A and B for each of the cases. So if we have case one, there should be a case one A and B. If we have a case two, there should be a case two A and B. If we have a case three, there is a case three A and B. Now, case one, case two, case three, all just have slight difference. Now, for you to use this particular market structure where price sweeps Asian low at London section and gives you a market structure shift, there is one rule only, only one rule. And that rule is that Asian section must have consolidated. If Asia didn't consolidate, if you have a structure where Asia is trending to the upside or to the downside, this particular structure will fail. So Asia must consolidate. Once you see that Asia consolidated throughout the entire section, this works mostly on Euro USD and GBP USD. If you check well, those are the only two pairs I trade. Sometimes I trade gold, maybe Nasdaq too, but Euro USD and GBP USD. So Asia consolidates, and then London will sweep Asian low, give you a market structure shift right here. And then what we are trading is demand zones, not other blocks. This is your structure shift right there. And then you have your demand zone somewhere here. So you want to go long from here, stop loss somewhere here. Or you could go 50% of your demand zone, something like this. Your first target should be Asian high. And then if that Asian high is taken, you can now hold price for a longer time, maybe deep into New York. You close it. This is case 1A. Now, case 1A and B all look the same. The only difference between case 1A and case 1B is that in case 1B, there is a POI, higher time frame POI, where during London session, when price, the same thing occurs, Asia must have consolidated. And then price now opens at London and takes that Asian low. If it takes the high, then you know you are going to be selling for that day and not buying. But since it took the low, but for this purpose of this class, I'm going to be dealing with only bullish classes, bullish examples. Sorry, bullish explanations. Maybe during when I'm showing you examples, we could also see bearish examples. So the reverse is just the case. Price now sweeps Asian low, but then sweeps it inside a demand zone. Now we are now meant to buy directly from that demand zone, just like this, and hold price till whenever you want to take your profit. But for me, I will recommend you go always 1:4 for the meantime until you master the strategy. So case 1A, Asia consolidates and then price sweeps Asian high, sorry, or low, Asian high or low with a market structure shift and gives you entry immediately. Then you trade to the upside. Case 1B is when Asia consolidates but London sweeps Asian high or low into a higher time frame POI. So we buy or sell directly from the higher time frame POI. Is that clear? Okay. When the price is ranging, let's say, um, how do I do this? I'll give you an indicator. I'll show you an indicator that will mark out the Asian high and lows for you. It will just highlight the Asian range for you. And then it's now meant for you to see if price is doing this, this is trending, or if price is doing this. Now you notice the difference between these two market structures. This one have a clear direction, is moving up. This one is going up, down, up, down, up, down. Consolidation, trending. You understand? 5 minute time frame. Yes, that would be case two. Let's go over to case two. So I'll delete this. I hope you guys have drawn this or maybe taken a screenshot and then jotted it down. I'll take it out. Case two. I'll probably stop at case two because case three rarely occurs or stuff like that, but might still be valid. But let's just stop at case two. So case two also have A and B. I'll take this out. I'll now bring this down a little bit for the A. This is case 2A. Case 2A. This is what case 2A entails. Price opens and then during Asian session, price does this and then starts breaking structures to the upside. Now, when London opens, London comes back to retest a demand zone inside the Asian section and then starts going up. Or maybe if price was trending down, it will retest a supply zone and then starts going down. Now, this is what this means. Sorry, let me shift this a little bit down so it will make more sense. This is the opening price, and this is the opening price. Price opens, then does this. Okay, so what this means right here is that in this case, Asian section was not consolidating. It was trending. It had a clear direction to the upside. And that direction it was going, probably because Asia must have taken a liquidity or it must have tapped into a demand zone, a higher time frame demand zone. You have to check before you start your day. So Asia starts trending to the upside. Now, when London, this is a case 1A, when London opens, London, all you have to do is you take your Fibonacci from the Asian high to the low and then find a valid demand zone inside the Asian section range, and then you trade from there. Like this one is a valid demand. You just buy from there and continue price to the upside. This is a case 1A. A case 2A. Case 2B is almost exactly the same thing, but in this one is, let's say, Asia started trending to the upside when there was a valid demand zone below it. It didn't quite tap into that demand zone. This almost looked like a case 1B, but the only difference with this one is that Asia was trending to the upside. It was not consolidating. So there was this demand zone. Asia failed to tap to it, but then continued going down. So what you expect London to do is for London itself to now test this demand zone from Asia and then continue going up. This happens. You see these two scenario I've drawn for you guys, case 1A and B and case 2.
Well, for the second case, we have two cases, right? Two
Yes,
possibilities.
yes.
Okay.
There, there are two possibilities.
Anyhow, on the second case, so Asia is trending, and then London probably here is manipulation,
Yes, yes.
and
London.
manipulation here in the Asia range, and second one is manipulation below Asia range, right?
Yes, yes.
Okay.
First one, first one, case 2A is Asia is trending, London manipulates into the Asian demand zone, like a demand zone within the Asian range. But then case 2, case 2B, the second case is that London manipulates below the Asian range because Asia failed to tap into a valid demand zone. So that is basically it. Case 3 is just almost the same thing. Asia trends, and then case 3, I'm not going to draw that one. Just let me just give you guys. Let's say Asia
Uh,
is trending to a POI, and then price starts and it reverses. Now you might be looking that, oh, Asia is trending to the downside, so I should be trading to the downside, but you have to check where Asia tapped in first before the reversal. So you don't have to be trading in opposite to what price wants to do. Yeah, ask your question.
I want to ask this point of interest that you mark down below Asia and London session. Uh, how we can find this demand zone that you mark
Have you
below?
seen order flow video?
Yes,
Institutional order flow. Did I send you the video?
you sent me two videos. Yes, I saw them.
I think it was price cycle and market structure. I didn't send you institutional video. I will send you institutional order flow video. So you look at it.
Okay.
That's how you find how to pick your own POI. It's there, it's already explained. So let's go to live examples. No. Okay, the one by the left. Yeah, it's daily. It's daily. And we are dealing with. I'm going to give you the time you are supposed to be using. Yes, body close. Yes, body close above the high. If there is no body close above the high, I'm not taking it. This is where I was trading from for today. This was where I considered my structure shifts. It has already reached 1 to 4. Now it might come back because I've already set it on break even. Might come back to take me out on break even. No problem. Or maybe you could just retest this point and start going up. No problem. So what's SMO? That's for ICT. I don't really know anything about ICT and their drawn liquidity or no drawn liquidity. I just do my thing. Okay, so
Well, I want to ask how you analyze through time frames, how you
you are
start.
just you are just going to stick to only one time frame, only one, unless you want to check a higher time frame demand zone. Only then will you go to, let's say, 15 minutes or 1 hour. You don't need to do top down analysis or anything. So what's
Can you show that example
yes,
that you
that's what I
sent me?
wanted to show now.
Mhm.
I
Okay.
want to show you guys live examples. Today is 24th, so I wanted to start from the 24th of last month till the 24th of this month. That's 24th of March to make it 30 days. And this is 24th, this 25th. Okay, so that means we'll have to use 22nd because 25th, 24th was between within the weekend. So we are going to start from this candle all the way down here. So let's go down to 5 minutes. So first thing, all you will have to do is go to your indicators tab on your trading view, and then you type in FXN. Once you type in FXN, you'll see FXN week and day separator. You see Asian range, Asian section range. That's the one you are using, Asian section range. So just click on it. It will plot the graph for you on your chart. So what you want to do is you go to your settings, remove the lines, remove the labels on price, values in status line, and all the stuff. Then the timing is, or this time is in New York section time. So once you are changing the starting time is 8 p.m. New York time. This one is okay. But the ending time should be at, I think, is, sorry, just hold on. Should be at 12 a.m. That should be your ending time, or somehow you can keep it at 1 a.m. But 12 a.m. It's is the best time to keep it at 12 a.m. That's to show you um your Asian section from 8 till 1 a.m. or 12 a.m., whichever one you like. Then for the London and New York section, don't set anything else. That's all you just have to set. And then you click OK. Now notice what this will do for you is that it have already plotted out Asian section range for you from this point to this point. And you clearly see that today was a consolidation day. And that was the reason I had that buy here. But let's go to yesterday. Or in fact, let's go and start from the 24th and then we come down all the way down here. Sorry, guys. It's going to take long, but it's worth it. You guys just have to enjoy. You just have to endure it and take everything as I'm going to be teaching you. So, like I said, what you should be doing mostly is just um 1:4 risks to reward, and then you close your trade for the day. And also note that you are going to get losses. There is no guarantee that since you are you are here, you are going to be only getting wins and wins and wins. No, it doesn't work that way. You will have losses. Definitely, you will have losses. Okay, so this is where we were starting, right? This is the line I drew. So, in fact, if we start from this one right here, I will just plot it out and ask you guys which case you think this is. So, this is Asia for the day. Now, this is opening price, the opening price for the day. I think it's here, opening price. So, Asia is doing what? As you can clearly see right here. What do you think Asia was doing?
Well, and how do you know when it's opening price?
Oh, you don't know when time opens in the day? 10 p.m. New York time. You convert that, sorry, 10 p.m. London time, convert it to New York time. That's when the price opens. Or if you don't know the real price open, just use 12 a.m. Yeah, 12 a.m. New York time. That's the true opening price day. 12 a.m. New York time, which should be around 6 a.m. London time. But the real opening price in a day, when the day opens, it's um 10 p.m. London time. So that 10 p.m., if you convert it to New York time, it will be around 6, 7 p.m. So this was around, this is 12, this is London time, somewhere around, yeah.
This is 10 p.m. London time, right?
Yes, I'm shifting it. It will be around 10 p.m. London time. This is 10:15. This is 10. Yeah, here. This is the opening price for London for the day. But then the true opening price is 12 a.m. New York time, which is around 6 a.m. London time. We should be here. So you have to check for 6 a.m. somewhere here. So opening price there. So is that okay?
Yes.
So what was Asia doing? As you can clearly see there. So which case are we looking at right now? Good. We are looking at a possible case one, A or B, but we don't know which one is going to occur. So first thing we do is to zoom out. Now, since we don't have any supply zone that price could tap in right from this area, we know that we should now be looking at a case 1A, where price will just sweep Asian high and give us a market structure shift. Now, notice what price did. I'm going to be listing it so that each one that plays out, we count it one. The ones that fail, will count it two. We count it, sorry, 1, 1, 2, 1. So at the end, this is just 30 days. You see how many trades you could get in a week, in a month, just with just this one simple strategy. So this is Shanghai right here. Price swept it there, wicked out, and then gave us a market structure shift here. And there were two entry points. The first one is this demand zone, and then the second one, sorry, supply zone. Second one is this one. The second one was respected. So if we get in here, stop loss somewhere around here, and then take profit of price reach one is to 11 hour, but no problem. Oh, our time. I'm going to I'm going to start the class again in 15 minutes. I'll send you guys another link so complete the examples because this is going to end in 15 minutes. So, oh, okay. Then you can, once this elapses, you create another one, send me the link, I will forward to Ivana, and then you make me a presenter, so I will present. Oh God, I was not recording this. Oh, I wanted to record it, but I didn't record it. Fuck. Sorry. So this is
Well,
is
my question here is, you draw down that liquidity is swept on the Asia session here,
yeah.
but also, do we have liquidity swept on the downside?
We no longer care about the downside because it swept the upside first. So
But the
that already
downside is first one
is it. This is equal low. This is equal
equal.
low.
Mhm.
Yes,
Okay, because it's not visible.
it's equal low. Can you
Mhm.
see it now?
And do we have rule? Do we have rules for market? How you say MCC
Market structure shifts.
shift? Yes. Do we have some rules here?
Not exactly. It's just the normal market structure shift rules that you know online. That's just it. No other rule. The only other thing that will have rules is what's it called? BFR. When I'm teaching BFR, that one will have to come with volume, but this one doesn't really care about volume. Yes, yes. If you can't really, like, what I do is, in a case like this, if I wanted to risk 1% of my account, I'll divide it into two. I'll risk 0.5% here and 0.5% here. If I wanted to risk 0.5 of percent of my account, I would risk 0.25 here, 0.25 here. Just divide it into two. Because you never know which one is going to play out. There is nobody on earth that knows which zone or which, except the banks that trade from there. There is no other person that knows which zone is going to play out or not. If anyone knew about it, there will be billionaires.
Well, can you show once again the entry point? It's not so visible if you can zoom the picture. So on the first demand, what are you marking here?
It's just normal demand zone. This entire consolidation, drop, base, drop, demand zone. This one was the entire move started from here. This is a case of what we call rally base drop, and then it left a supply zone here, and then we now have a drop base drop. So it left
And how
another
many
supply.
candles you are marking like as demand zone?
And it's not about candles. If you change this to line charts, you'll see what I'm marking. Drop, base, drop. I don't really trade other blocks like I told you guys. It's demand zones. I
Okay,
highlighted this
and when
entire consolidation from the up to the down. The
mhm.
candle bodies mostly from the top to the down. That's what I
Uh-huh.
highlighted.
Uh-huh. Okay, and for example, if market respected the first demand, how will be your entry?
This one or this one?
Yes,
This one.
the first one. Yes, it
This
will be
one.
on 50% or yes, the first
No,
one.
I'll still go entry just at the entrance and then stop loss above it.
Uh-huh.
It depends on you if you want to go with the 50%. If you want to go with the 50%, you place your entry there. No problem. But just know that you might most likely miss the trades.
Mm-hmm. Okay.
It's possible you might just miss the trade. Okay, so let's go to the next day. This day, what do you think Asia was doing?
Trending probably.
It's trending. It's not probably. Asia
Uh-huh.
was clearly trending. It's trending. Now that Asia is trending, we know definitely whether we should continue in the direction Asia was trending. But in this particular day, there was no entry. So I'll just keep it because London started and continued going down. They didn't give us entry. So we'll skip it until another one where we'll get an entry.
Mm-hmm.
So let's go to the upside to another one. What do you think Asia was doing here?
Also trending.
Also trending. Exactly. Now, Asia is trending. First thing you have to check if there is a demand or supply zone below Asia. First, we have this entire demand zone right here, but it has been mitigated, as you can see. Then we have this one, and Asia have mitigated this one. So that leaves us with the only demand zone we could be trading from. We could use this what's it called? This becomes the only demand zone we could be trading from. This one, I'll highlight it because Asia is what? Trending. And just look at that beautiful trade. Beautiful. And this one, if you went in here, good. Your stop loss would be right there. I would advise to go for 1 to 4 or probably into New York 1 to 8. If you got in here at the 50% of the zone, still okay. Two of them played out. So this would be our second win, right? Are you guys with me?
Yes, yes.
This would be the second win and a missed trade. Okay, this one, this one failed. Not really like it failed, but there are two cases here, not two. What do you guys think Asia was doing?
Changing,
Yes,
consolidating. So
Asia is consolidating because it just made a low and a high and trended in between. So since Asia is consolidating, what we should be looking for is a sweep of either the high or the low, because this is not a supply zone. It's not valid. It's not really valid unless if we zoom out a little bit more, maybe we have this one right here, but it's way way far. The one that the other day Asia formed, but London didn't mitigate. Remember, remember this one where we say it trended, but London didn't mitigate it, so we say we'll skip it. So
mhm.
that was the only supply zone that was valid we could be trading from, or we'll wait for price to sweep the high and give us entry. So this is where it gets very interesting. Is that if we were looking for a case 1A here, we had our first market structure shift here when price shifted, but then it failed. Can you guys clearly see it? So this would be a case of first a failed trade. I'll take it down. And then we had another structure shift after price tapped into this demand supply zone. It's very tiny, but it's valid. We had this structure shift right here. I hope you can clearly see it. Structure shift. And then we have this entire demand zone from this point all the way up there. We have that demand. So I normally tell them like if the first one failed, you should try the second one. If the second one failed again, you leave it for the entire day and then come back the next day. That's what I normally tell everyone. So this will still be a valid entry. And if we held, that would be another win. So this will make it 3 wins and a loss, probably. So
how
for
are you
this one,
set? How are you set up the take profit?
I'd say always go for a 1 to 4 weeks to rewards
Uh-huh.
until when you've mastered the strategy. You can go for a
Okay.
longer um weeks to reward. So this one is very, 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 very. What was Asia doing here?
Trending.
Asia is trending good. So this is a case too. Now, the first thing we have to note from this point is that there are other supply zones above this Asian range. So we shouldn't be looking for supply zones in here. We should be looking left to see our supply zone. So for you to pick the right one, you probably have to use your fib from the low to the high. Is where this move started. Yes, maybe from the high to the low. From the high to the low. This one or this one.
Yes.
You can still put it there, whichever one you want to put it. So now, where do you think your supply will be? I mean, I would probably like it to be around 61.8 or above. We have this one here, unmitigated, but it didn't touch that one. We have this one, but it has been mitigated by this one. So we'll now shift our attention to this entire one right there. And that's where it reacted from. So maybe this would be your trade from this point.